What's going on, everyone, and happy Monday. About 82% of stocks in the S&P 500 finished in the green today, which is definitely a lot better than the bloodbath we saw from Friday. But in today's video, we're going to talk about the important things to know for this week because we have a giant earnings lineup ahead of us. We have powerhouse companies like Tesla, Meta, Microsoft, and Google set to report, among many others. And in this video, we're also going to cover what the market normally does in environments like the one we are currently in. There's money to be made in both directions. So in today's video, we're going to cover the stocks where the money's flowing right now and some important things to be aware of. But with that being said, Tom, let's jump right into today's episode.
Yeah, the first thing I really want to do today, Mike, is go back and look at that heat map again because, man, that was a pretty big sea of green. And whenever I look at the bottom left, NVIDIA really led the way, one of the bigger stocks and most influential stocks in the S&P. And you can see that a lot of its brothers, I guess you could say, like Apple, Google, Microsoft, all also were up in the green. So what did we see today? We saw a really good recovery out of the SPY. Now, I'm not going to say it was a massive recovery or anything. You know, if we look and we zoom out over the past couple weeks, we're still down quite a bit. So what I'm thinking, Mike, and what I was saying this morning on the live stream is that with the overall market move to the downside, you're going to get these times where the market starts to pull back up. And I think that considering how much drop that we've seen in the short term, this might be one of those times where we start to see some true recoveries like we saw today, or even some more consolidation just down around this bottom $500 area. So I'm definitely going to keep watching this like $500, $495 like zone here in the short term. If the SPY does start falling down under and breaking that, that will be a good sign. But whenever you have these tech stocks recovering like NVIDIA and others, that's a great sign. But like I said, those moves over the past week, 2 weeks, and even from Friday, like in NVIDIA's case, it's not even recovered back up to the top yet. So there's still some room to go for a true recovery. And a lot of these stocks are on key resistances like that key $800 level here.
Great point. And another thing worth noting is that as we look at the market on, let's say, a daily chart or a weekly chart, we can see for the most part the market goes up, right? That shouldn't be a surprise to anyone. But when it goes up, a lot of times it just like takes the stairs higher, as a lot of people like to say. But when it does fall, it takes the elevator down, right? And what that really goes to demonstrate is that when we see environments where the market's falling, what we also tend to see is volatility increase. So it's like when you are in periods where volatility is increasing, which we are in right now, it is common to see big moves in both directions. One thing that a lot of people don't even realize, and Tom, we're going to go back a couple of years now, all the way back to the COVID crash, is that even in one of the most violent and brutal market crashes in history, there were a handful of green days sprinkled in. Like, yes, the market fell a lot, but there were sure a lot more green days than most people thought, right? So that's worth noting. Like, we are in a period of increasing volatility. That is not to say we are in any environment that is, even remotely similar to the COVID crash, but volatility is increasing, and it's probably going to continue to increase for the next couple of weeks and months, and honestly throughout the rest of this year, especially given the election this year. So that's worth keeping in mind, and what this makes for are opportunities in both directions, which we're going to talk about as the video goes on. But Tom, looking at the market right now, we are at this key $500 resistance level on SPY. What are like the most important levels to watch over the next couple of days for both directions?
Yeah, today I was really watching that key $500 area, and the market really blasted up through there in the afternoon, ran all the way up to like the 502 resistance. So I do have resistance around 502, and more importantly, though, even up around 504.50 to 505. I think that range right there that I'm marking on the chart is going to be very important over the next couple days. You can go back a couple weeks ago and see how much chop and price action was coming in right around that area. And the bottom of that range is literally the 502 resistance from today. So I'm going to really watch that 502 area. If we break there, then maybe like 504 to 505 as a target overhead. As big support to the downside, though, I mean, you got to watch 500 since we're right there. Obviously, 498.50, we talked about that one breaking out today, and then under there, 496 is pretty good too here in the short term to the downside. You guys can see a lot of these hits here on the chart, but yeah, Mike, it's a pretty big chop zone here coming up, and hopefully the SPY can break that or honestly reject, and then we can get more good moves to the downside like SMCI and others, which have been paying off hugely in the short term.
No doubt about that. But while we're on the topic of the overall market, let's jump into the seasonality chart, which we covered in yesterday's video, but it's still relevant for today and even for the next couple weeks. Basically, the red line shows the market this year. The green line shows some of the best election years in what the market has historically done. And then the black line shows what the market has historically done for all election years. We can see so far for this year, it has been following the path that some of the best election years have followed. But whether you're looking at the best election years going all the way back to 1949, or you're looking at all election years going all the way back to 1949, the period between like April and May tends to be pretty weak for the market. And we're already seeing this weakness. So keep that in mind. Like, the market we're in now is not the same market that we were in a couple weeks ago, and it's certainly not the same market we were in a couple months ago. So understand the market's changing and make sure to adapt to that. And when I say this, what I'm really saying is that almost anyone could have gotten away with blindly buying any dip you've ever seen in the market over like the past couple months. But that doesn't mean that same strategy is going to work now. You might have to trade a little bit more strategically. So just keep that in mind and, make sure to adapt with the market.
Yeah, that's a really good point, Mike. I mean, it's been so easy to trade things to the upside lately. Like, anytime there's a dip, it's instantly like, oh, we're buying the dip, we're buying the dip. But now that's not really the case anymore. I hate to say that today, on a day where the dip's getting bought up, but you guys get the point. If you guys are out there truly thinking about market structure and stuff, you will get that point. And whenever we're looking at a lot of these stocks here, Mike, it's not looking good in the short term. Like you said, times are changing. I'm going to take my drawings off NVIDIA, go to a daily chart, and look at the scale of this pullback that we're seeing. We have not seen a pullback of this scale since the uptrend started. So, this is definitely a weird time here for NVIDIA. And I'll be real with you, Mike. Whenever you zoom out, it starts to remind me of some of those moves like Zoom and others from the COVID run up where they started really crashing back down. I'm not saying NVIDIA is going to do this, but just expect a lot of volatility here as they start to fall.
All right, good stuff. So just keep that in mind going forward, but we also have a very exciting earnings lineup for the week. Tesla is set to report tomorrow along with the Visa and Enphase, so I think we're going to be set for a pretty exciting day tomorrow because there are sure a lot of eyes on Tesla right now.
There really are, Mike. That's definitely got to be the biggest report of the week. Probably the most, I would say, most popular report anyways. Maybe not truly the biggest, but I know everybody's really watching Tesla short term, especially with how much Tesla has sold off recently. And they also recently missed deliveries. And I don't know, Mike, there's been a lot of bad things with Tesla. Today, they actually fell a lot on price cuts again. So another bad day for Tesla here today. And those price cuts are just... I hate to see it, Mike. It's like, are you really going to keep cutting prices? Your margin's already so low. Maybe they're just doing it because demand is shrinking. But at the end of the day, it hasn't really been helping their shares when they've been cutting these. So I hate to see it. I don't want to see them keep doing this. And they had a truck recall over the weekend with stuck down accelerator pedals. Granted, the fix is pretty easy. I saw it get fixed in 45 seconds. But still, either way, it's a bad sign that now the truck's getting recalled. Right into these earnings too. I don't know. It's all stacking up against Elon, it seems, right now in the short term.
That's the thing. It's just the sentiment with Tesla right now. It's struggling, right? And especially when you have a stock price that is, falling by the day, it definitely scares a lot of people who already own the stock, but it also kind of scares some people who are sitting on the sidelines considering buying this dip. It's like when you have bad news day after day after day, and it's not the best thing you want to see as a Tesla investor. So I think this earnings report will be very influential because, if they hit it out of the park, that can really, bring some structural changes into the stock. But at the same time, if things keep going like they have been over the past couple months, it could just make things even worse.
It could. I'm actually really worried about a big gap down here. Like, if it does gap up, I mean, then it'll be all sunshine and rainbows, right? But I mean, if this gap's down, Tesla's going to get to levels that a lot of people never even fathomed it could be at, considering the prices that they used to be. And this really worries me, Mike, because, Tesla went on that magnificent run. We're starting to see a lot of other stocks start to dip off of pretty magnificent runs, too. So I don't know. That's another chart, that you can look at and say, like, wow, maybe some of these overextended stocks are truly overextended now. But yeah, it sucks for Tesla in the short term, Mike. You never want to hear that. But there are quite a bit of other earnings too. Like if we look at it, go ahead and screenshot it, guys. Microsoft and Google at the end of the week are big, and there's even some other ones mixed in, like Southwest Airlines and the oils.
And then another thing worth noting while we're in the topic of earnings and earnings season is that gambling ahead of earnings is a stupid thing, guys. Like, I know every now and then we see an earnings report that just goes crazy and the options pop up by 800%, but it's just not worth it. Like, if you are actually trading to trade, you should not be YOLOing into earnings reports. If you are looking to play the move with earnings, there's a lot of opportunity after the fact as well. But just YOLOing, gambling earnings reports is not what real traders do. If you treat that as a gamble, then that's fine. But just don't get gambling and trading confused, because they're two distinct things. So keep that in mind going forward, because I see so many traders lose so much in earnings season. It's just it's so easy to avoid as well, because it's just it's for gamblers,
It really is. And, I think that comes down to human psychology and, gambling, every once in a while, like I would say, Mike, like 3 times a year, I might play earnings. It's like, sure, like sometimes I might get into it a little bit, but at the end of the day, I mean, you got to know going in the overall risk with it. And just understand that, if you're watching this video right now and you are trying to trade these earnings this week, and you end up losing, you'll look back at this and say, man, we should have listened to him. So just heed that warning there. It's a pretty tough game over the long run, Mike. And, we don't want to say that and like get everyone discouraged either, because the moves after can be awesome. Like, let's look at Netflix. They reported the next few days they kept going down. Even this morning, they continued down pretty well, providing a lot of short-term opportunities. And you don't have to swing things through earnings. You can just get into those short-term opportunities that way. And, we might see Tesla like pop up or gap down and create some opportunities there later in the week.
Check out Lululemon on the daily chart. Instead of gambling ahead of the earnings, you could have made more money playing the move after with taking much less risk. The stock struggled a lot on earnings, but it continued to fall lower for like weeks after the fact. So let's trade smart this earnings season and trade how real traders trade. But besides earnings for the week, Tom, what is the economic schedule looking like?
Yeah, it's actually not too crazy this week, but there are a few pretty big ones. So the durable goods orders on Wednesday, 1 hour before open, that's going to be okay. I don't think too big, but the GDP growth rate coming out Thursday, 1 hour before open, I think could have a pretty significant impact on the market. And then Friday, I think the PCE index could have even more. So definitely be ready for Thursday and Friday. The data is going to be pretty big, especially on Friday there. So we'll talk about this a lot more, though, later in the week, too.
All right, well, let's get right into some setups and predictions for tomorrow. A stock I'm watching pretty closely right now is JD. So this is a Chinese stock that had a phenomenal day. And Tom, look at that intraday price action. Can you ask for much more, right? That was really good. And some good volume came in as well. And a lot of other Chinese stocks did pretty well today. They're at historically low levels. And when we have a situation in U.S. markets where valuations are pretty aggressive and, some other stocks around the world are trading at much less aggressive evaluations, it definitely does bring an interesting risk-reward dynamic into play. And I think investors are clearly starting to rotate into them at least a little bit. And I think that's I think today is a great example of that. But either way, I'm looking at JD to the upside in the short term. I think the price action was phenomenal today, and I really like the way that a lot of other Chinese stocks are also seeing some great inflows as well. So JD is close on my radar.
Yeah, a lot of these China stocks are starting to look pretty good on the daily charts, bouncing off supports and everything. JD was one of the best ones today, so I'll definitely keep it on the radar for tomorrow on this recovery. It's pretty awesome to see. Now, Mike, we talked a lot about earnings tonight. There was one earnings play today with Verizon that wasn't too hot. They started running up at first, but when the market opened, boy, oh boy, did Verizon drop. You go out to the daily chart. I mean, this is a brutal drop here. So in the short term, I'm going to keep looking for more opportunity to the downside with Verizon. Of course, be careful of pullbacks back up. If we wake up tomorrow and you start to see Verizon gapping back up a little bit, and you see a lot of green, might not be the best one to trade down. But if we start to see it break below like 38.50, starts to break support pretty well, then I think we could see a nice continuation play on this one. But it was such a significant move out of a stock that doesn't usually like have candles that big, right? That's a pretty wild drop there on these earnings. So I'm just going to go ahead and watch it to the downside still.
I don't know which institution sold this one today, but they had no mercy. Ever since that thing opened, it was just non-stop selling pressure, and any like pop up that happened intraday just got like smacked right back down. So yeah, there was definitely some pretty serious selling pressure with that one today, because it gapped up, Tom, but that was pretty nasty.
Yeah, it really was. And that gap up at first, like whenever the market opened, I was like, wow, Verizon's going to open up pretty well today. And then a lot of people started alerting me this morning on the stream. They were like, Tom, check out Verizon now. I was like, oh boy, that is quite the drop there. And if you look at the volume, I mean, just look at that volume coming in there for like the first whole 30 minutes of open. That's pretty wild to see there. And even throughout the day, a lot of the volume started increasing quite a bit too.
All right. Another stock I'm watching pretty closely is WBA, and it's to the upside. So this stock is also in a historic drawdown right now. It had like all-time highs back in like 2015 of like just under like $100 a share, and now the stock is all the way down to like 18, and the sell-off has been like especially brutal over like the past couple months. It's starting to base pretty well off of this like $17.50 support level, and some really great buying pressure came in on Friday. Today the stock held up fine, but we still did see some good continuous inflows, so I'm continuing to watch this one to the upside throughout the rest of the week. I would like to see the stock break back above that like $18.50 level, and then just keep like continuous pressure on the high of day. And what would be really awesome is if we saw some price action similar to what we saw with this stock towards like the middle of December of 2023. It had a handful of like pretty big green candles come into play, and it just continued for a couple days after the fact and ended up having a nice run. But the stock has more work to do to get to that point, but I think it's pretty good the way it's basing off the $17.50 support.
Yeah, I really like this dip here, and I know that whenever this stock dips, I mean, some of those moves coming off of those bigger dips there can be pretty big, right? And whenever you zoom out, like, they're not even that big whenever you start zooming out on the daily chart, right? But they are big as far as percentages go in the short term and options go, so I'll definitely keep it on my radar, Mike. WBA is a pretty volatile stock. I think it's a little bit underrated, actually, considering how much moves that it usually makes. And going into my next play, Mike, I'm actually looking at Goldman Sachs, ticker symbol GS. This stock, if we actually go out to a weekly chart, is pretty close to the all-time high set back in 2021, very close to it. If we start to see some more uptrend here in the short term, I think that we could start to break out on the daily and potentially continue up with some of these good breakout candles. If we look at the daily chart and we go back to like March 20th, March 21st here, you can see how there was that big second breakout day, and that big breakout candle is kind of what I'm looking for here tomorrow with GS, or even just this week. Like if it consolidates at the top, I'll be just waiting for that big breakout. So if we could get a move above 420, everybody's favorite number, then we could go ahead and look at this one to the upside. But that's a major resistance here, and there's so much bullishness out of these banks, I wouldn't be surprised if it ended up breaking again.
All right, sounds good. Well, it's now about that time for today's momentum plays. And with the first one, we have KWEB to the upside, which is basically a bunch of Chinese stocks all under one ticker.
Yeah, if Queb can break above 26.75, then go ahead and eye up calls tomorrow. I really like it breaking that 26.50 resistance at close.
All right, with the next one, we have Netflix to the downside.
NFLX, pretty big stock out there. If they end up falling under 548 intraday, then go ahead and look at puts.
All right, and then with the last one, we have Zoom to the upside.
Yeah, Zoom's pretty nice in the short term. If they could break out above $60.10, then go ahead and eye up calls.
All right, so we have the upside level for Zoom, and we have the upside level for KWEB, and then we also have the downside level for Netflix. Either way, we are watching these 3 stocks pretty closely for potential day trades tomorrow, if and only if they break through the levels Tom listed. For the upside setups, we're looking for them to the upside, and Netflix, we're looking for that one to the downside. We want to see strong, consistent price action with the stock, so keep these 3 stocks on watch. But let's jump right into today's $1.9 million big money trade of the day. And we are looking at ticker symbol BABA. So this stock has, again, been very oversold. It's at a historically low level. It had some great price action today. And the big money put, realistically, just under $2 million into the 65 strike calls with this one that expire on September 20th of 2024. These call options are already in the money. They have a good amount of time to them. The stock is at a major support area. It's already showing good signs of momentum, and I'm pretty excited to see how this one does, Tom. It's at a pretty big pivot point right now, and as long as it can pick up some decent momentum, it could be pretty exciting.
It really could. I mean, with how much this stock has fallen on the chart over the past couple of years, and with all the China stocks starting to bounce off supports around the same time, it's a really good sign. And we've been talking about how the Chinese government has been trying to prop up their markets a little bit, and there's been a lot of different things going on that would maybe suggest that some buying would come in here. And I think that the transition, maybe with our big tech stocks in the U.S. starting to fall, will really help investors flock into the China stocks, right? Where else are they going to invest? Why not look at some of these bigger tech, nice companies in a different market, right? So I do think it's good here in the short term. And watching these supports, I really do like this big money play quite a bit. Just give it the time it needs. It's not going to be something that you buy this week and it necessarily goes up, 300%. It's definitely going to be one that you got to hold for a little bit.
And another thing worth noting with the Chinese stocks right now is they have just been battered down so much over the past couple of years, where it's all of those who would have shorted this stock already did, and they probably covered by now. And those who, would have sold, who were just holding the stock throughout this giant run up, probably have already sold right now. I mean, the stock in this case went from $320 a share all the way down to 65. It's if you could hold through that, then, you'd probably just hold through anything else. So it's what there really is more than anything else is just a shift in risk reward, right? It's the stock definitely can continue lower, but it's just, once you fall so much, it just gets harder and harder to fall. So looking at BABA right now and many other stocks like this one, they're going to be very interesting to watch over the next couple months. And in many ways, whether we're looking at Chinese stocks or semiconductor stocks or AI stocks or crypto stocks or any other type of stock out there, a lot of it has to do with sentiment, right? So if you have an industry or group of stocks that start to get, good news or start to move in a big way, it, reflexively brings more attention to that industry or that group of stocks. And, once more people are talking about it and, trading it, that's what gives it its true, volatile potential, you can say. So keep a close eye on it over the next couple weeks and months.
Yeah, the China stocks, I mean, as long as something doesn't happen with Taiwan, Mike, I mean, they might be all good, right? That's the only little outlier there that I think people forget. But then again, if something happens with that, I think we're in a lot more trouble than worrying about our China stocks. So, but at the end of the day, I do like them up here. It's pretty good off support, and yeah, I definitely agree. The overall sentiment right now seems to be changing with the China stocks, which is good to see in the short term. And I really like the supports. I think we'll see a lot of buyers start to come in, and just with the overall market structure of things, I think that these bottom supports are providing really good opportunities, even for shares. If you don't want to buy the option, even just to start a nice little share position down here wouldn't be a bad idea.
Love to see it. All right, so looking at the market right now, over the next couple weeks, it's going to be more important than any time this year to trade smart. We have a lot of big earnings coming out. We have the market changing in a pretty big way. So, of course, respect those stop losses as always, but make sure your position sizes are reasonable, right? You can have a great trade setup, but if you size too heavily on it, you can put yourself in a really bad position. So, let's trade smart over these next couple weeks, especially. There should be a lot of great opportunities presented to us, and I think that was made abundantly clear on Friday as we saw a handful of options increase by, 10,000% to 25,000% in some cases. So let's have a great month, or a great rest of the month, I should say. And I want to give a giant shout out to today's member of the day, which is Tricky in the StockedUp Discord with their trade with some ARM put options today. So you've been in the Discord for a little bit over a month now, so it's awesome to see a post like this one. Keep up the great work. And if you guys are new to our videos, consider demolishing that subscribe button to get our videos recommended to you more often. In every video, we talk about the most important stocks to know about. We cover charts that you wouldn't otherwise see anywhere else, just like the seasonality chart we showed today. And yeah, we cover big money plays as well. So consider joining the StockedUp crew. And besides that, thank you all so much for watching, and let's have an amazing week in the markets.